Hello, it's Paul here. I hope you're very well. Welcome to this week's edition of Millionaire Maker. What we're going to be doing this week is we're going to put the candidates through their paces with deals. Just to remind you, Millionaire Maker is a program where we are intending to make as many people as possible millionaires. The prize, as well as making extra £1 million, is a trip of a lifetime to the Monaco Grand Prix and a 2-week retreat with multi-millionaires. So, let's get watching, and I hope you enjoy. Welcome everybody to this week's edition of Millionaire Maker. We have the judges assembled, and we have some news for you. We've shaken up our team. So here is our new team. We are pairing up Tom and Abby. We still have Gordy and Anniko as the other team. Well, on the basis that I've decided to do the right thing for the competition, I've decided to do the right thing for you, I've decided to do the right thing for all the viewers watching everything, Abby and Gordy have decided they've won because I've done the right thing. Anniko and Gordy have decided. Direct payback for Anniko's claims and Gordy's claims that they'd won. The reason Gordy's not here is Abby's hospitalised him. Well, actually, to be more specific, he's had to go to the doctors, and I hope he recovers after the competition finishes. The competition is all about you, and the competition is all about how you can all inspire many other people around the UK and even worldwide to be millionaires. We are going to have one of the judges, one of the mentors, is going to be available for you in the room all the time, and they're going to be sat at a table, and at any point you can go over and ask for their advice. So for today, that judge, that mentor, is going to be Tom. So your task is to find a deal. You can't be millionaire property investors without deals. And you are going to be judged on that deal. So you need to get a deal, you need to secure the deal, and we're going to be back here in a few hours' time taking feedback on how you've done that. Do not forget, the evictions are starting. The votes from the public are going to be coming in. So your performance in this task is directly linked to whether you stay in the competition or not. You've all done a lot of work to get this far. Don't let yourself down at the final hurdle. We good to go? Let's get going. I hear you're looking at 2 deals.
Got 2 deals, yeah.
Indeed.
One local to here, we're in Doncaster at the minute, so I don't know, Chris, maybe you take us through the first deal and send the second. So what is it you're looking at?
So the first one is a relatively straightforward buy-to-let investment. Yep. It is a 2-bedroom house. So we've had an offer accepted at 62,000. Looking at comparables, we've got a market value of 85,000. Achievable rent, 500 a month.
All right.
Mortgage at 75%, we were looking at 63,750.
So this one, you'd be looking to buy it for cash?
Yes.
Do a little tiddly refurb, I think you said 2-3 grand or something?
Yeah, about 3 grand, yeah.
So your all money in is what, 64, 5?
68,000.
68, okay.
Tax and all those things.
Yeah, okay, you've put all the costs in there, great.
We are, yeah.
And what kind of money would you have left in?
We would be looking at, we're just playing about with the refurb figures, but we're looking at somewhere around about the 3 grand left in.
Around about 3 grand left in.
Yeah.
And that's going to give you a massive ROI.
We're about 61%.
61%, wow, and that's an accepted offer?
Yes.
So that's a done deal?
Offers accepted.
Yes.
Yeah. And with that one, if we did look like we had to leave in 3-4k, we'd push it out to get 80% loan to value and take all the money back out.
I don't know if everybody out there in internet land knows that. Most people assume 75%, so we can get, but you can actually get 80. If Sen, we maybe talk a little bit about your commercial deal. A purchase, you would do the refurb, and then you've agreed in principle a pre-let to, is it a charity?
It's a charity, yeah. 10-year lease with a 5-year break clause.
10-year lease, so you would need to do it up, but then post that, would it be an FRI lease?
Correct.
Full repair and insurance lease? So it'd be 10 years at, I think you said £20,000 a year?
20 grand a year.
Buy it and refurbish it to their spec for 140k or less.
Yeah.
Commercial valuation is going to be circa 200k.
Yes.
70% on the 200k is 140.
Yes, all money out.
And therefore, if you can get it for buy it and refurbish it for 140 or less, happy days. And of course, people watching may not know this, but I mean, Chris, what's your background?
Construction. Been in construction
so that's
for
what you
years.
do. So great JV going on here. High level of confidence that you know what you're talking about from a refurb perspective.
Total spend we want to get to is 140.
Yeah.
Or negotiating the terms of the lease with the tenants. If we can get most of the money back out, we'll hold it, we'll take the capital allowances. Yeah. And if we can't get all the money back out, we've got a serious asset to sell on to someone who wants to be hands-free as a done-for-you deal.
What's the critical things to get this commercial deal over the line?
Confidence in the end valuation and the certainty of that pre-let agreement. Then a bit of negotiation on the purchase price with the vendor, which can be done with our surveyor contact.
Well, good luck.
Thank you.
Look forward to hearing about it later on.
Thanks very much.
Cool. Thanks.
Anita, Tom, how you doing?
Good, thanks.
Good.
Anita, what's the deal we're looking at today?
Right, well, this is a deal I have actually been working on for a little while.
Okay.
I'm heading to Nottingham tomorrow
All right.
to finalise the deal. I am just waiting to hear back from the vendor.
You've heard your network is your net worth. You got this deal through networking.
I did, actually, from a lovely lady who's now a business partner of mine.
Okay.
And we're joint venturing on some properties in Nottingham.
Okay.
But she is leveraging my time,
Perfect.
which is an interesting thing
Perfect.
because she can't afford the courses, and so she's learning from me.
All right.
Quick question though, why didn't she take this deal? How come you created this solution?
Because she doesn't necessarily have the knowledge that I do, and that's not to say. I mean, she's a very smart lady and she's wonderful, but she's trying to learn property strategies.
You explained to me earlier that this was originally potentially rent to rent.
Correct.
And it's a 14-bed HMO.
15 bedroom.
15-bed HMO.
Yeah.
And the owner was kind of, well, don't really want to do a rent to rent. How about you buy it?
Yeah.
And you've bridged the two,
Yes.
and you've turned it into a potential lease option.
Correct. Well, the purchase price, I have made an offer of 640,000.
All right.
With a lease option for 5 years. He has some capital in the property, so I thought that was a good opportunity to realign things for him, so that he can actually take some money out of it at the outset.
He would refinance.
Yeah.
You would help him. And I think you said he could take about £250,000 out.
Correct. Once he pays off his current mortgage,
Sure.
and then I pay his mortgage for the next 5 years. So
the lease cost to you would be around about £2,000.
at the moment it's running as an HMO. My idea would be to run it as either SA or even a youth hostel in that particular part of Nottingham. Yeah.
Tom, one of your specialist subjects is rent to rent.
Yep.
And this is kind of rent to rent, but it's transitioned into a lease option. So
Yeah.
as a specialist in that area, in your area, I mean, what's your thoughts on this deal?
It sounds like I'm quite risk averse, so I'm thinking, what is she doing
Me
to risk mitigate? So, a cash flow from a rent-to-rent HMO for that size would be phenomenal. But it's also then who's going to manage it. But in terms of the cash flow, it sounds great. And the other question I'd be thinking would be, what was the input to make it the style you need to make the cash flow from it? So what's the input of investment needed?
Yeah, well, I mean, I suppose over a 5-year period, there is going to be money invested into it because I think it needs some modernisation.
So ultimately, have you factored in the cost for refurb into your appraisal?
Well, no, I haven't really, and
But not yet.
Not yet. I mean, I have a pretty fair idea of what it will cost to uplift rooms,
Okay.
and I can do that as and when I feel it's necessary.
So let's just recap then. So you've secured a purchase price, and you can buy that over the next 5 years.
Yeah.
You listen to the problem of the landlord,
Yeah.
and
He wants to get out.
the initial proposal was that he didn't like the idea of rent to rent, but you, for me, it's like strings to your bow. You looked at another string and said, "How about this one?"
Yeah.
And then you found a solution. You've got a potential to uplift the rent roll.
Yeah.
You've solved the landlord's problem by giving him a fixed amount each month.
He's nearly 70 as
Yeah,
well.
and he can get to refinance it.
Yeah.
So
Gets
he's
cash
happy.
up front.
Yeah. So I think it's a great opportunity. So, but you also now know what you need to do to finish the pieces of the puzzle to work out whether it's going to be a great deal for you or whether to sell this on to somebody else, like Paul mentioned earlier.
Hello, Cynthia. How you doing?
Hi Paul, how are you?
You're smiling as always. I'm good. So, Cynthia, the deal you're looking at here, or we're looking at together on Rightmove.
Yes.
This is in Hackney, where
Yes.
you're from,
Yes.
and it is a 4-bedroom house.
4-bedroom house, yeah.
Why is this particular one interesting?
Well, this one is interesting because it's for sale with planning permission for another 3-bedroom house.
this isn't just a house.
No.
It's house with planning for another house.
The house plan.
And the plan's already in place.
And the plan's already in place.
It's been on the market for $1.05 million.
$1.50 million. Yeah.
You've been in contact with the agent. You've been doing
Yes.
some negotiating.
Yes.
And what offer? And what's the offer price they've accepted?
They've accepted 980,000.
980,000.
Yeah.
So that's a £70,000 saving right away.
Yep.
And you're also bringing the purchase price under $1 million, which is to your benefit with regard to stamp duty. Then to build the extra house, and you've added in the legal fees,
Yes.
stamp duty, and everything.
No.
For the sake of a round number, it's £200,000.
200,000. Yep.
So your total costs
Yes.
should be 1.18 million.
1.8. Yeah.
Yep.
Yes.
Then from a GDV perspective, you're a letting agent.
Yes.
You know properties round about there.
Yes.
So this
what-
house is round about the $1 million mark.
Yes.
And the 3-bedroom house, how much?
708.
780.
Yep.
So you'd be looking at 1.7, 1.8 as a GDV.
Yep.
And let's say you then put a mortgage on the pair of them,
Yep.
times 0.75 is 1.275.
1.275.
But you've paid less than $1 million for that house.
Yep.
You can get the other one built for less than 200,000.
Yeah. And
So you've maybe got 60, 70k
60
as a
left it.
contingency.
Yes.
So this looks like a good deal.
Yeah, but my long-term plan is to use them for service accommodation, which that's what
Both
I specialize
houses.
in, both of them, which
Yeah.
I specialize in, and I know that I'm getting 7,000 a month turnover for a 4-bedroom. So
Because you've got some nearby, haven't you?
yes,
So a 4-bed like that one that
Yeah.
you're looking at,
Yes.
be maybe $7,000 a month turnover.
yes,
At the
turnover
moment, you're paying
3,000.
£3,000 in rent,
Yes,
and your mortgage on that will be less than
so
$3,000.
yes,
So you'd actually make more money.
make more money. Yeah,
But even with what you're paying, how much money are you making after all your costs, as I say, on the 4-bed?
about 3,000.
About 3,000.
Yeah,
So the two together will be like $7,000.
£7,000 profit.
So never mind the fact you've got no money left in.
Yeah,
Potentially you've got an extra $7,000 a month
for
times 12 months is £84,000 a year.
Yeah.
No
Yeah.
money down.
yes,
That's a monstrous return on investment.
yeah. So there's a lot of potential with that one.
All right.
Yeah.
No wonder you're smiling. So what?
Yeah. So
Between you and doing the deal,
Yeah.
what issues do you need to
a
overcome?
JV partner who might be interested to put in maybe 20% for us to get the deal over the line.
Yeah. You need somebody with maybe 300k.
300k, yeah. There'll be a lot of return on investment long term.
Well done, Cynthia. Thank you very much.
Thank you.
You two, being you two, you're not looking at one deal, are you? You're looking at two. Let's talk about the big deal first. So what's the big deal?
Yeah, so the big deal is a hotel for 1.5 million.
1.5 million, but there's been a bit of a price reduction on this hotel.
Yeah, it was 4 million.
What's 4 million? That's quite a lot of money off, isn't
Yeah,
it?
yeah. So
And
B&B. maybe.
B&B, quite a lot. This would be a longer term project.
Yes.
It'd be a question of buying it, getting it trading again.
Yeah.
So how long are you thinking that could take?
Yeah, so that would be 3 years.
3 years.
Just running through the numbers, if you did it as serviced accommodation, then at £150 a night, 8 rooms, 50% occupancy,
Yeah.
that would be £219,000 a year
Nice.
in serviced accommodation income.
Service accommodation, and if you even gave that a yield of, I don't know, 8% or something, times 12.5, I mean, you're probably knocking on the 3 million type mark
Yeah.
in
yeah.
terms of valuation. So yeah, great deal.
So yeah, so you could probably go from 1.5 to, as
Yeah,
you
double
say,
your money.
2.5, 3 million. Yeah.
Double your money. Okay, so you're waiting to hear back on that one.
Yep.
Put an offer in.
Yep.
How did it feel putting in an offer for 1.5 million?
A bit scary.
A bit scary.
A bit scary because it's a jump up from what we've done previously.
Mm-hmm.
But
it's like Monopoly. You know, you buy a house, buy a house, buy a house, buy a
Buy
hotel.
a hotel. I'm with you.
we're being literal.
I'm with you, and I'm absolutely with you. Literally buying a hotel. Bought houses, time to buy a hotel.
Yep.
Okay, good. And where did you find that?
Right Move Commercial, actually.
Right Move Commercial. So the
Yeah.
deals are out there.
They are.
Okay, but your fallback, should that one not come off, because your two tasks were big GDV, so
Yep.
profit or whatever, so $1 million, $2 million, that counts as a big profit.
Yep.
You're also working on a slightly smaller deal
Yeah,
with a
we
slightly
are.
smaller investment cost.
It
So
is,
what's
but,
this one all about?
Bigger ROI.
There you go.
Basically, it will be looking at taking on the house that we're currently renting as a rent-to-rent to SA from the landlord. We've discussed it previously. The numbers work out that we'll be able to rent it for slightly less than market value anyway because
Okay.
we've got a relationship. So £1,000 a month, but at
But the normal market rent would be
1,250.
1,250.
It's quite a lot under. 70% occupancy would give us a net yield of 2,300, which is
Wow.
quite a nice amount.
Yep.
And as I say, spoke to Goldie about startup costs because it's in very good condition.
Yep.
It's about £300, so the ROI would be just over 8,000.
£300 setup cost
Yep.
for £2,000 a month, 8,000% ROI. Yeah, that counts. Well, good luck, the pair of you,
Fingers
as always.
crossed.
Thanks, Paul.
So, Bo, how you doing?
I'm good, Paul. How are you?
Very good. What are you up to today?
I am looking for a buy-to-let.
A buy-to-let.
With a buy-to-let, because I live in London, I think it's a really good idea in terms of there being such a shortage of rental properties out there. So that's what I'm
Certainly,
looking
the last 12 to 18 months has been a huge decline in rental properties available in London, and rental incomes are shooting up in the capital. So, good time to buy-to-let. So, which area are you looking at?
I'm looking at East London at the moment. I find that properties there are slightly more affordable than anywhere else. I mean, all the ones that have come up on Rightmove seem to be in East London anyway. So
Okay. So when you're searching, are you searching, or I suggest you search by how long they've been on the market? That's a really good way to
Yep.
search on Rightmove, because if you can find a property that's been on there for a year and a half or something, probably going to be a little bit more amenable to an offer. And my first flat, I don't know if I ever told you this, was in East London, and my first flat ever was in East Ham. That was 36 years ago.
okay.
So probably gone up a bit since then. I paid £9,000 for it. So would you like a flat in East Ham for £9,000?
Yes, I totally would.
Yeah, all right.
You got one going?
No, I don't. If you find any, let me know. Okay, so you're going to be looking for any outside help with this? You're going to be looking for like JV investors, anything like that?
I can self-fund it at the moment. I would be open to investors.
Had you thought about working with, I mean, obviously we were talking about this earlier, your background is Chinese.
Yep.
So you're still in contact with anybody over there that might want to invest in the capital?
No.
No, all right. Because I was working at the weekend with a guy, Tony, who'd come all the way in from Hong Kong, and the reason he came here, so he's Hong Kong, Chinese,
Hongkonese.
or whatever.
That's what we kind of call ourselves.
I'm not sure what that is. But he'd come here specifically because he's got high net worth investors and he was looking to deploy their funds in the UK. So
Right.
maybe something to add to your list to think about.
Okay, thank you.
Just as a thought. But good luck, and I'll check back in with you later on.
Okay, thank you so much.
Enjoy the day. Stephen, how are we doing?
Yeah, good, thank you.
Excellent. So what is it you're looking at?
I am looking at a former retail premise. It was previously a shop, then it was converted to, it was previously a house, sorry, then converted to a shop on the ground floor with residential above.
Yep.
It's got an alternative scheme for a 7-bedroom HMO, or permission to convert back to a single dwelling, so I'm
Yep.
looking at that.
Okay. And what sort of purchase price is that advertised at?
Advertised at 200
And where did you find the deal? How did the deal come to you?
from a commercial surveyor. They've also got an auction house attached as well. So
Commercial surveyor, that's interesting.
Yeah.
Commercial surveyor, great tip everybody watching. If you haven't got a commercial surveyor, get hooked up with a commercial surveyor. So have you got any other thoughts about what it could be if it wasn't a 7-bed HMO?
well, if it wasn't a 7-bed HMO, you could split it into flats, flat on the ground floor, flat on the first floor. But I think for this, probably a HMO would be best.
So if we're going to get a rough valuation on that, it's like 7 beds, £95 a week each. I'm sure you know this, there's 4.2 weeks in a month. So for the sake of a figure, let's use £100 times 4 is 400, so that's 2,800.
Yeah.
2,800 times 12 is going to take us to, what's that, 31,600, I think, something like that. With the valuers is going to then take off what do they do in your area? 25% or a third?
Generally, yeah.
25% for voids and maintenance and that stuff. So you're probably going to be down to a net of about 24.
Yeah, something like that.
Do you know what the valuation yield would be on an HMO on a net yield of 24 in your area?
Not in this specific area.
So is that a call you could make to the commercial surveyor?
Yeah, yeah.
Because if it was in Doncaster, you'd have a valuation yield of about 9.5. So based on that kind of income, you'd be looking at a finished value from a commercial perspective as an HMO of probably around the 260.
Yeah.
So the critical number you need to find out when you're appraising that deal is the valuation multiple for an HMO in that part of Birmingham,
Yeah.
wherever it is. And what sorts of things are you going to be pushing for? Are you going to be, so obviously the valuation yield, but what else is in your mind to be asking questions?
Because they've got a letting arm as well.
All right,
Yeah,
sweet.
so I'll be asking what just
Demand.
demand for the area. I mean, I've looked on spare room and stuff like that, but
Yeah.
just in case.
Another thought for it, I mean, something we do here in Doncaster is we've got a couple of care companies and a charity that have taken whole buildings from us
Yeah.
and given us guaranteed rent for 5 years.
Yeah.
So maybe ask them if there's any opportunities like that.
Yeah.
All right, well, good luck.
Thank
And
you.
I'll catch up with you in a few hours.
Okay, one thing you'll really make sure if you're looking for a great deal is do the numbers work. Do the numbers, do the numbers, do the numbers. Take all emotion out of it. Now, because Stephen, he actually, when we appraised it and looked at it, the numbers didn't work. He was not going to make enough cash flow and it was going to leave too much money in the deal. So make sure you know how to appraise it well, and the way to do that is get the right education.
Panel, have we got some deals for you? I think you're going to be shocked, you might be horrified, but I think you're going to be ultimately pleased. Let's see how this all works out. So we're going to start over here with Chris and Sen, and I know you two have actually got 2 deals. So Chris, which deal are you going to talk about?
I'll take you through a smaller buy-to-let purchase that we just
Buy-to-let, all right, so this is a buy-to-let local to here, and it's a below market value.
Yes, it is.
What's the numbers? So the purchase plus the refurb?
Purchase price is 62,000. Refurb is 3,500.
Okay, new valuation,
New valuation is 85.
money left in,
Money left in 260,000. 260,000. 260 pounds. Sorry.
£260. You know what, I'm tempted just to give you that money myself. That's just, you can't have a no money left. You can't leave, nobody wants to leave 260 quid in. Job from me, never mind anybody else, get rid of that 260 quid somewhere, somehow. Okay, seriously though, good work. So a standard below market value buy, refurbish, remortgage, and then just put it out as a buy to let. Is that roughly the plan?
Yeah.
Nice. Where'd you find it?
Found it on Rightmove.
Excellent. So what does the panel think? I mean, it's a nice simple deal. What are the risks? Would you do it?
Well, how do you know you will get it? So how far you gone, or is it just an analysis you've done so far?
We've had an offer accepted.
Oh, well done. That is,
Well done. Round of applause. Excellent.
Was that today, was it?
The offer went through, spoke to the agent this morning.
All right. So it's a very simple deal. So probably not much to say, really.
No, do you know what excites me is these smaller deals are they're great deals. You know, and something Jonathan said the other day at our mentoring session, even these smaller deals of 1-bed flats or studio flats, Jonathan's still doing them.
Well, for sure. Actually, on that point, our friend Jonathan, he told me that he just started investing in a few properties up north, some single lets.
Yes.
And from the beginning of the year till now, do you know how many of these deals Jonathan's done?
I can imagine a lot.
I think it was in the 70s. I think it was 72. He's just done a few.
Yeah.
And do you know what his target return on investment is? Anyone? 20.
20.
Won't do it unless he gets 20%. So anyone that's thinking, I don't want these tiddly little single lets, maybe think again.
Yeah.
Would be my advice. Good enough for Jonathan, good enough for me.
We're looking at a detached, stone-built, high street property in an Aberdeenshire town.
Okay. And purchase price?
The purchase price and the refurb price we're looking to arrive at is 140,000, and I'll tell you why soon.
A commercial property?
It is a shop front with, it's a 3-storey building with office attic space above.
And who are you looking to rent it to?
So we are in discussions for a pre-let agreement with a charity for a 10-year lease. Yep.
10-year FRI?
Correct.
And how much?
20,000 per year.
20,000 per annum?
wow.
All right, 20,000 per annum. And the reason why you want the purchase and the refurb to be a certain amount of money is what?
Because at a conservative yield of 10%, that gives it a 200k valuation, and a 70% loan to value means all money back out at 140k.
Yeah, well, we set you an ROI challenge. So the challenge I'm having, panel, judges, is that these ROIs, they keep going towards infinity, because if all the money's out and whatever, so it's almost pointless asking the ROI on these two deals, because it's...
Well, to put a conservative light on that and a sprinkle of realism is, if that can't quite be achieved, we're willing to leave 5 to 10k in the deal, which would obviously be well in excess of 50% return. Worth letting you know that the cash flow on this is 11,600 per year after paying an interest on the mortgage.
At 140.
Yeah, the 140 borrowing.
Yep.
So there's still, off 20k, 11,600 profit per year.
Yep.
So it's a nice cash flow, and if we were to leave 5 to 10k, and we'll do that. And option 2, if we can't refinance all the money out, or up to 5 to 10k, we can sell the asset as a done-for-you commercial deal, and flip it for anything from 30 to 40k profit to us.
Yeah, okay, I think that's conservative. So what do we think?
Well, first of all, well done. You know how usually they say that if something too good to be true, probably it is. I disagree with that, but what I tend to do when I find something is very good, like the return on this one, to balance out myself, I always look for what are the potential downsides. So could you tell me 2 or 3 things what can go wrong with this deal?
Absolutely. The tenant chooses to exercise the break clause at 5 years, and what looked like a great 10-year run ends after 5 years, and we think, well, what next? So plan B would be to convert the first floor and second floor into a 2-bedroom and 1-bedroom flat and go to single lets, and still have the downstairs to let as commercial. Or we could sell the entire thing, because we have to refurb it in order to let it, so there's still a good amount of value in the bricks and mortar. So we've got different options to go with: flipping the whole thing, flipping some of it, developing the single lets and keeping that, selling that. So there's a few avenues.
Also, the commercial downstairs is big enough that it could be split into 2, so if someone didn't want to take the whole unit, we've got smaller options there for more independent retailers.
Yeah, thank you. I think it's always useful to have
definitely
that kind of discussions. Thank you.
All right, so well done. Moving on to our next, and bear in mind, everybody listening at home, you are going to be voting. Do you want Chris? Do you want Sen in the competition? Because if you do, you better vote for them.
2 semi-detached houses just outside London.
Yep.
Purchase price for 480k.
Valuation?
600k.
So you've negotiated a 120k discount for two bed semis.
Yeah.
What's your plan?
Plan is to spend 40,000.
To do what?
And to do extension behind both the properties.
So permitted development, extension.
Yeah.
And increase the value of the properties.
Increase the value, and then create the 2 rooms on each side. So it will become like a 4-bedroom house each.
So you'd have 2 4 beds.
Yeah, and then giving it to the council tenants for local housing allowance, which is £1,560 per property.
Bang. Okay. New valuation?
New valuation 700,000.
700,000. So once you've done all the numbers, because you've done this before, how much are you going to leave in the deal financially?
After refinancing, my money is going to be invested 16,200.
Rent per month per 4 bed?
£1,560. So for each property, I'll get £4,000 initial incentive.
So of your 16 grand, you're going to get 8 grand back straight away.
That's true, yeah.
You've done it before, you know the area.
Yeah.
The deal's secured.
That's true.
What's stopping you?
Nothing actually.
Just took my line, Paul, because I wanted to ask what's stopping you. So if you know all these, you have the experience, why you haven't done this before, you know?
But the deal has just come within 1 week last week, so that's why I was negotiating that. So.
And it is now finalized?
It is finalized, yes.
Okay, no, well done.
All right, Cynthia.
Hi.
What's your deal?
Yes, so my deal is a 4-bedroom house that's for sale with planning permission for 3-bedroom house included.
In the garden?
In the garden. The purchase price is $1,050,000, but I've been able to negotiate down to 980.
Okay, and you've done the numbers,
yes,
and you've calculated what it costs to build the other unit.
Yes.
And by the time you've finished, you're up at about, is it 1.2, 1.25 million, something like that?
Yes, definitely.
Yep. And the GDV, the new value for the two together?
Is 1.7.
1.7?
Yeah.
Okay, and you would then refinance it, and I think you'd actually be able to take a small amount out of the deal.
Yeah, small amount.
What would you do with the 2 houses then?
So basically, because I'm service accommodation, I would like to use the properties for service accommodation, but I will have to leave some money into the deal. but the service accommodation values could be very high, as I know the values for contractors in the area.
Well, we did some rough numbers, and on the two houses together, based on other properties around about you,
yes,
so these are actual numbers, these are not theoretical numbers.
Yes,
the properties you're running would be about £7 grand a month.
£7 grand a month, yeah. For the two service accommodations.
And the return on investment would be
huge, yeah.
I worked with you on this one. It's exciting, yeah. So, how did you go about working out what the development value was, the GDVs? Just maybe give me the three steps that you took to work out the GDV.
So, the 3 steps to work out the GDV. I went to the EPC register, found out the areas, size of the property, and then used that to times by square footage of £150 per square foot to get a rough idea of how to get the build costs.
Okay.
Yep.
Could I just check, Cynthia, I know your experience, so I don't think that includes new build, so I have no doubt about the getting the income when it is operational as an SA unit, but how you are going to make sure that the build costs are staying within those 200,000 to 300,000?
I was thinking about what the disadvantages would be for me, and I think getting a JV partner who's experienced in that would be good for me. So that's what I'll probably look for, a JV partner who's experienced in new builds to help me.
I think that's so important to know what is our focus, to know what our forte is, and just make sure that on everything else you have partners. Yes. Well done.
Yeah.
So I was looking at the studio flat in East London for going at 119. It's been on the market for at least 6 months now. Yeah. And Tom helps me with the calculation with the return of investment of 13%. Mm-hmm.
What's the downside of the deal?
Downside is it's 24 square metres.
Yeah, that's a big downside, isn't it?
Yeah, so it's missing 6 metres squared.
Well, just so everybody at home's understanding that, it's very hard to get a mortgage under 30 square metres, almost impossible under 25 square metres, even in London, even as a studio flat. So if you can't get a mortgage, what are you going to do?
I'll take a look, see if it's worth investing, or I might just have a look elsewhere.
Okay. So this one is, you've got an agreed price, it's a deal, but you're just really not sure if you want to do it or not. So what?
Yeah, it's the implication of the future. It's future-proofing the deal.
Sure. So what are going to be the critical factors for you to decide? Are you going to go and buy it or not?
Probably just seeing if there's an investor who would like to get involved. If not,
maybe move
on.
The challenge is what's the exit, but actually if you think about it, even if you bought that in cash and with the rent roll managed cost to manage it and whatnot, you're still bringing in around 8% return on your cash. So there's quite a few investors would happily have 8% for just a solid rental in London. So if it doesn't work for you, you could still monetize that and connect an investor who hasn't seen it yet and just get that fair exchange for your time. So there's another motivator there. So I think even though it's not the best deal, but it's a deal for somebody, I think. You just need to find the right person.
I was just thinking of SA in it, and did you do your numbers on SA to find out the return?
In terms of SA in it, I really didn't think about it because it's about 10-15 minute walk away from the station. I know London and I don't see the potential in it being in zone 3 and so far away from a station, it working as an SA.
Being somebody who uses SA, I'm from Newcastle, so I travel to London. 15 minutes from a tube wouldn't bother me. For me, it's all about the price. And London, when we come down, it's always expensive compared to the north.
I understand you got quite a big HMO deal on the table.
I think it's a pretty good deal.
Okay, where is it?
Quite happy. In Nottingham.
Nottingham?
Yep.
How many rooms?
15.
15. And this deal came to you, I understand, through, everyone says your network is your net worth.
Yeah, through somebody that I met at the Six Figure Summit.
Oh, perfect.
And she wants to leverage my knowledge and my time because she actually can't afford to do the education herself. So okay. I was quite happy to do a sort of joint venture with her.
Yeah. So what's the details of the lease option?
Okay, so the details are I've offered £640,000 purchase price, 5-year lease option. I'm going to help him refinance the property because there's a decent amount of capital. He's an older chap and one of the things he said to me was that he has more Saturdays behind him than he has ahead of him. It was very important for me to try and find a deal for him that really, really worked. So to refinance means that hopefully we'll scoop out somewhere in the region of just over 200,000 once he's paid off his current mortgage.
For him?
For him. And then I pay the mortgage for the next 5 years.
But the interesting thing is that even when you pull out the extra 200k, because his current mortgage deal is so bad, the mortgage payments almost halve.
Yeah, which makes it better for me.
Yeah, for sure.
Obviously.
All right. So your cash flow, while you've got it under the lease part of the option, so you're paying X amount per month, you'd be paying about £2,000 a month?
Around about that, depending on what deal we get.
What's your monthly cash flow, your annual cash flow?
Well, at the moment, the property's turnover is around £6,500 a month. My objective would be to look to transition it into SA. Obviously, it's a tricky thing to do to change an HMO into SA at the same time. You don't want to have HMO and SA running simultaneously. Oh no, I'm doing the deal.
All right.
It's I'm going to Nottingham tomorrow to have hopefully the final conversation with the gentleman involved. I mean, really, the other part to it is that I've offered him a non-refundable £10,000 option fee, which will come off the price if I choose to buy the property at the end. So I'm also looking at potentially 5k per room. I am going to uplift the property. That is the intention over the 5 years. I'm looking at potentially around 5k per room, which is about 15k per year, which in the first year with the outlay is about a 268% return on investment.
Okay.
And then over the coming years, it will cash flow higher than that, maybe 350% return on investment.
All right.
I love it, and I tell you what I really love, Anita, how you were looking for a win-win. You know that your wealth is determined by how many people you are helping, and Anita's first sentence was about, I want to help that gentleman, and I was looking hard to help it. That's why she's going to make the money. Don't forget your focus. I know you want to help, but you can't do everything.
Yes.
So make sure that in the deal, you know what's your part of it, and just do that, because other people will come with, what about this, what about that? Just focus.
Yes.
But well done, really like it.
Thank you.
Okay, George and Sarah, what have you got for us? I know, as always with you two, there's two deals.
Well,
one is never enough.
There are two of us.
Yeah, well, okay.
Yeah.
So you're going to talk to me about SA and George about hotels?
Yeah.
Yes.
Okay, so where is this SA unit?
It is in Bindon. It is where we're actually renting right now. It's our house.
You're living in it?
Yes.
So you're moderately familiar with it?
Extremely.
So in order to kickstart your property journey, you actually sold your house for some capital, which you've now reinvested, and you've moved into a rented property.
Yes.
Not satisfied with that, you now want to do a rent to rent on the one that you're renting.
Exactly, and rent something bigger.
And rent something bigger, like your style. So how much would the rent be?
£1,000 a month.
Okay, and based on your figures, given you're living in it, you should really know this. How much money are you going to make out of it as an SA unit?
Net's about £2,300 a month.
And that is at what level of occupancy?
That's at 70. At 50, it's 1,600.
Okay, so even at 50%,
yeah,
16. I mean, that's like whatever that, and close to £20,000 a year.
Yeah, which wouldn't be bad.
Which wouldn't be bad. That's going to pay for a pretty decent place to go and live, if nothing else. But you've also got to be careful with setup costs on service accommodation units. So I know you were talking to Gordy about this, so maybe we can get Gordy to comment on it. So your setup costs were quite high, weren't they?
£300 because it's pretty much a new build and it's been renovated. It's good condition.
Yeah. Okay. So a £300 setup cost and £20,000 a year.
Yeah.
Sounds all right.
I'll take it.
So what's stopping you?
Finding a new house.
Oh, okay.
Yeah,
well,
we've got to find a new house to live in. But
what's the matter with you? Camper vans, tents?
Moving with mama.
Oh my God! Wow.
So we had a phone call.
Yeah. Sorry about the call, but yeah.
So
no,
it's
not.
It's a hotel and conference centre, $1.5 million. Now the reason.
And it's in the southeast.
It's in the south, yeah. And the reason for the low price is we would have to operate it, so we would have to rent out the rooms.
Check this out, everybody. The previous price that it was advertised for was
$4 million.
And price reduction to
$1.5 million.
Which you've just offered, and offer's just been accepted.
Accepted about 5 minutes ago.
Yeah.
Round of applause. There you go. Woohoo!
will have to
There's a
operate
deal.
it. It does have owner's accommodation, so this is the house.
So
that
he
we
wasn't
would exit.
joking. He is going to go and live in it.
And as a serviced accommodation, running at 50% occupancy, it should achieve 220,000 a year.
Okay.
Now, if we only achieved that and we didn't run conferences, but we will plan to do that, we'd get, estimate a GDV of, 2.2 million. And when we refinance it at 70%, we should basically be able to pull all the money back out again. So that would be in kind of 3 years down the line.
And you're saying 3 years because of books and
Exactly.
proven income and that stuff.
But on top of that, we can run conferences, and for 3.5 years, one of my jobs included running conferences. So
6-figure summit.
Exactly.
Yes,
Do you want to come to Kent?
Of course.
Yeah.
Nothing wrong with Kent.
Yeah. So we also, we're writing a book, and with Paul's help, developing a course to make people financially free. So we plan to run it there.
A training and conference centre that you live in.
That we live in, yeah.
This is really hard for me to say, and I'm trying to get it out. But I absolutely love it.
Thank you.
Cracking deal.
Well, I just wanted to say well done. I know it was in the making. We talked about it last week, and brilliant that you got the deal. So I look forward to seeing how you are pulling all together.
It. I look forward to staying in it.
We'll invite you round.
Yes.
We'll invite you over.
Indeed. Well done, guys.
Well done.
Okay.
Wow, what an episode. The focus, the concentration, they're still buzzing, they're still floating around me as the room empties. Every single one of those people has just come through with an incredible deal. They're all different. I mean, I guess there are some consistencies. Many of them are semi-commercial or mixed use. They've maybe gotten from a commercial surveyor. All of them, in different ways, are looking to have a significant uplift in value. And this is really the first time that I've seen the competition come alive, because there's some real choices to make there about what's the best one. It's not a question about being nice to everybody anymore. There's deals there on the table that can individually, in one deal, there's many of those deals that can make £1 million. So I need you, viewers, now to be thinking about this. Who's your favourites? Who do you want to keep in? Who do you not want to lose? Do you prefer the deals the couples have got? Do you prefer the solo effort, the lone wolves? Who are you going to be voting for? Because it's going to come down to you. You are between these contestants and their dreams. It's a heavy responsibility. And as if you've ever heard me talk before, you know how I'm going to end. You have been wonderful. They have been wonderful. I've been Paul. And I will see you very soon.